Welcome back to America's Commercial Real Estate Show. I'm Michael Bull. This segment is brought to you by buildout.com. If you run a commercial brokerage firm, you need to check them out. Today we're talking about retail. The show is called Retail 2018. My guest is Barbara Denham. She's an economist with Reis. And Barbara, we talked about the performance of retail and the changes going on in retail in the previous segment. Let's talk about the investment market, because I think it's interesting when you're in a sector with this having a lot of change. A lot of change is going on obviously in retail. Sometimes that means a lot of opportunity. So when you look back at 2017, how much velocity did you see in the sales of retail properties?
Definitely the sales volume has declined in 2017. There's a lot of caution in terms of the investment market in retail real estate. The average transaction volume in 2016 was like in the $14 billion range per quarter. And in 2017, it was definitely lower, like in the $10 to $11 billion range. So there's definitely more caution. There are a lot of niche investors who do their due diligence and they know a good property. So there still are sales. There's just there's not as much optimism. It's actually in the retail world stagnated in the high 7%. They haven't been falling, but they haven't been rising too high. And I think the reason why cap rates have stayed in the 7.6 to 7.8% range is because the properties that are trading are at the upper end. So you're seeing it's called selection bias. When the properties that trade in a given quarter at the upper end, you see a decline in cap rates or flattening, and you think that goes against conventional wisdom, which is that when there's not as much rent growth and higher vacancy, that cap rates should go up. But the cap rates are based on what trades in the quarter, so you have to base the cap rate on exactly what's trading, and what's trading is the better properties.
Yeah, that makes a lot of sense. And there's a lot of retail properties that are very core and are performing very well, and I think investors like to see that. Also, I guess, how about new supply, Barbara? It seems like you don't see malls being built. You see mixed use, you see freestanding retail. What do you see for new supply and the impact there?
Definitely new supply has been lower in retail. In fact, completions in the fourth quarter was below 1.5 million square feet, and that was the lowest since, I want to say, 2013, where it was about 1.3. So there's definitely been reduced activity, but even that much would be a surprise, because the overall new completions for the year was about 10.2 million square feet, down from 11.3 last year. So there hasn't been a lot in this expansion, but there's more than people would think, given, the store closures and all the news you hear in the media. But again, the good news is that net absorption has been positive and vacancy rates have been flat, and rent growth is positive. So it's not as dire as people think, and the investment and development market has been very cautious. So it's a market that's at least in balance, and a lot of investors understand this, which is why they're still considering new properties.
Yeah. Well, we're talking with Barbara Denham with Reis about the retail investment market. So Barbara, what do you expect moving forward into 2018 for volume and for cap rates?
Well, we don't see cap rates moving too dramatically, because there's, there is somewhat an optimism in terms of consumer confidence in retail sales going up, and a lot of that probably will be seen even in bricks and mortar, because even though, like I said in the beginning, the tax benefits of this tax bill go mostly to the upper class, there's still this idea that people will have a little bit more money in their pocket and that job growth will be positive. So there's a general sense that the retail market will do okay, but if the Fed funds rate goes up, usually that has an impact on cap rates going up, and that, interest rates going up makes an investment harder to finance, and you see that in the overall return to the cap rate. So you have these competing forces moving in both directions for the cap rate. So we really see a stagnating. If anything, it'll probably go up just a little bit more from the fact that this is retail, so there's a lot of risk, and the interest rate impact.
Right. Well, Barbara, what would you leave our audience with if they're an investor in retail properties? Maybe they're a developer. Maybe they're considering, hey, is it time to sell? Is it time to buy? What kind of tip would you leave retail owners with?
Well, I definitely think that there's opportunities out there, and a lot of it is driven by job growth. So, as I probably mentioned in the past, there's a wide disparity in different metros. The metros with the strongest job growth are probably the better areas. Those markets include Seattle and Phoenix. Markets even like Jacksonville, Florida, and Fort Lauderdale are doing very well. So you have to look at job growth in general, but there's still markets that are hurting. In the last year, there was over 20 metros that saw job or rent declines, and those are mostly in the Midwest, but some, like I said, Fairfield County and Greenville, South Carolina. Even markets like San Jose aren't doing well. So I think, a lot of people think this has been the movement is going to be away from urban and more towards the suburban markets, and we're not really seeing that. We still think that the urban cores are doing very well, and in fact, they may even do better with this tax bill than the suburban markets because people won't be buying houses like they used to because, if they can double their standard deduction, they won't be buying a house because, they can do the tax differential and say, it's still cheaper for me to rent than to buy a house. So, you have to look at all those things because usually buying a house generates a lot of consumption in retail. And if people aren't going to be buying houses, they'll be renting, but they might be renting downtown still. So there's a lot to consider, but there's still opportunities in retail.
Yeah, that's a good point because the old saying, right? Retail follows roofs.
Yep.
All right. Well, Barbara, thanks for your information. It's excellent as usual. Thank you for being with us.
My pleasure.
If you'd like more information from Reis, visit Reis.com. That's REIS.com. Stay with us. I'm Michael Bull. We'll have more on the U.S. retail market. This is America's Commercial Real Estate Show.